Good morning, traders and investors. Welcome to Benzinga's pre-market info show brought to you by OptionsHouse. Joe, how you doing?
Pretty good. How are you, Joel?
Good, good. Back in the saddle here at the Benzinga control desk.
Glad to have you back, Joel. I missed you a ton.
Does anybody here in the chat room please respond if they is there any hint of sarcasm there in Joe's voice here? Good. Some things never change when you're gone for a week, correct?
Correct, sir. So just a recap on what you missed while you were gone, Joel. We had the five-star stock watchman, Christian Tharp, on the show on Tuesday. We had Adam Button from Forex Live on the show on Monday. And I'm going to blank on what we had towards the end of last. Well, we were supposed to have Adam Button on Friday, but he couldn't make it.
Actually, Adam Button broadcasted. Didn't he broadcast from a Greyhound bus?
Yes,
That was
he
pretty
did.
Impressive, actually.
He did. He was trying to wrangle in listeners on the Greyhound bus because he was on his way back to Montreal. He tried to fly back, couldn't get a flight. He'd been traveling back. Where was he coming from, Dennis? Do you remember?
Winnipeg? Wasn't he going Winnipeg, Toronto to Montreal or something? That's where he was from, was Winnipeg. But the huge ice storm there, which is crazy. I actually drove through that ice storm yesterday, just what was left over of it, and all these trees are down, and just basically the deep freeze. That was absolutely crazy there.
And Dennis, what are you doing for Boxing Day?
I'm broadcasting the show with you, Joel. Isn't this great?
Don't you have any Christmas presents to return or anything?
Actually, me and my wife stopped doing Christmas presents like 7 years ago, so which was the best thing because then it lets me off the hook and I don't have to shop because we know I don't like shopping.
We didn't do Christmas presents at our house either because it was all about everybody else, and when it came down to it, it's like, we don't want anything. Seemed like a waste of time.
We have everything we want with each other here, right? Oh, look at the Christmas.
We're blushing on the news desk.
Oh, the Benzinga news desk is all we need here.
So what did I miss in the markets?
Hey,
you missed. What do you think you missed? You missed new highs, Joel. That's all That's all the market does anymore. It only goes up. There's no such thing as going down anymore. We are at new all-time highs here. Woohoo! Even again this morning. Are we not kicking up there? What 1833.50? That's a new all-time high. What was the high on Friday? Or on I say Friday, getting all messed up. What was the high on Tuesday?
Tuesday all-time high 1829.50. All-time high close 1829. They didn't even let it get to the close on the open here in the S&Ps. 1829.75 the low. So I guess as long as we stay north of that close of 1829, the highest number I have here on my levels is 1853 1/4.
1853. How do you come up with that number? I got to hear this one.
I can't tell you. I can't.
Is there secret sauce? You can't give out the secret sauce.
If I told you, I'd have to kill you.
Special ingredient soup.
I'll tell you, the Santa Claus rally is beginning today. Did you take a Santa Claus into effect to come up with this number here, Joel? Looking old at the all statistics there, saying, oh, the market's up an average of 1.8% during the Santa Claus rally. So I'll take 1.8% times the current price and come up with 1853. Is that how you did it? Did I guess right?
No, actually, I will. Hey, Jay Period says, welcome back, Joel. You were missed. So Jay here.
Oh, somebody's missing Joel.
I just wonder if that's me, like signing on to the chat room and welcoming, being nice to myself. But no, it's not.
And he also dropped a little boxing pun there, a little Boxing Day pun. It's kind of hard to open presents with your boxing gloves on.
It's also hard to click the mouse with my boxing gloves on here too, because it is Boxing Day in Canada. So
to tell you the truth, the way that when the S&Ps and when stocks get to these kind of levels, there's really only two things that you can use to come up with. Well, actually, three things. You could just make things up. Number one.
And how many stars do you give to the made-up numbers?
Number two, you can use the average daily range, and I didn't check yet today, but I bet you the range in the average daily range in the SPOOs right now is probably like around 15-20 points. So that wouldn't quite take you up to 1850. And the third thing is just something that I've used over the years, and I've talked about it with you before. The formula, the support resistance pivot point formula. that incorporates the the prior day's range and helps you come up with some points. I don't like to rely on those as much as former daily highs and lows, but since we have nothing here in the book to look at, that's what I'll be using. Same thing for like Google and some of these other stocks that are trading in new all-time highs. Really need to look at the average daily range, and then also if you want to throw that pivot point formula in there. And then also, Dennis, your old half and whole number theory. So you could use 1850 as like the next half number in the S&P. So that's 20 handles away. I don't know. I don't know if we have the gas to get there today.
You never know with this market, though. But those half and whole number theories do work on all-time highs. Look at ExxonMobil there. There's $100, absolutely enormous on that. And that guy, it's one guy sitting there. He's selling 75,000 shares, and everybody stepping ahead of him. It got up to 99.95 5 days ago, and it keeps trying to pop up there in the mid-99s, but just can't go up. Same story with Chevron, too. There's a guy sitting there at 124. Sitting at the point, trying to sell a cool 30,000 shares up there. Every time it gets up there, they step ahead of them. So a couple big numbers there. So big sellers do throw out orders at big whole numbers. There's a couple examples.
Yeah, ExxonMobil also is developing. I mean, it has a very well defined support and resistance. Double bottom 98.33 to 98.39. 98.60 was your low. See, that would be Friday. So there you have. You have three lows within a little over 20-cent area, and then the highs bunching up there. 99.95, the all-time high, closing 99.22. But I just noted that had been a little bit of a laggard, and then I had been looking at the CVX, and I figured there had to be someone up there at 124. But it looks like the high freaks are stepping out ahead of that actual number. I mean, the highs have only been at 123.55, 59 the last couple of days. Is this a day where Chevron gets that running start and blows through that 124 number?
It might, but maybe it's the smart Benzinga opportunistic traders that are stepping ahead of the high freaks. So you get the high freaks stepping ahead of the institution in the 90s, and our smart listeners might be actually stepping ahead, and maybe they're making some money here short in the stock up here in the whole 123.79, 123.60 area. Not sure if it's going to get the gas to get there today. We'll have to see. I think it could, though. Like you said, you always like it when it gets a running start at it. It did close strong there on Tuesday, and we have been up here a few times before, so I think if it goes up there again, it might have the gas to get it out, especially if you look at like the average range on a Chevron. It's probably about $1 to $1.50. So here you are, only 49 cents away from it, actually getting bid up in the pre-market at 123.64. So you're really only like 36 cents away from it. So maybe it's got the gas to get through it.
Well-defined support as well in this stock, 122.40 to 122.69 encompasses the last three lows. So very similar technical formations in the two big oil stocks in the index.
Yeah, and then look at General Electric here too, because it actually broke out to a new 52-week high. 27.61 closed at. Finally took that guy. We talked about him at 27.5 for 3-4 sessions. Could not get through him. Finally there on Tuesday, did take out the 27.50 guy and kind of had a running start at it too there. So there you go. Maybe Chevron's going to do something similar. But GE kind of off to the races here. It's up another 7 cents today. Where do you think the big next institutional seller is there, Joel?
28.
I threw you a softball there. $28. Yeah, there's another big gun up there. So I guess if you look at this and if it continues to run up, the next major resistance is going to be in those 27.90s. Those high freaks.
How big was that seller?
The seller at the 27.5?
Yeah.
I think it was like, I'm trying to remember. I think it was like 100,000 or 150,000. So it was pretty significant. That's a pretty big guy for even a stock like General Electric. So it held it down for, like, if you look at the charts, remember it got back down there like mid-November on the kisser to 27.5, and then it came back, and obviously that guy just never canceled his order. And the last 3-4 sessions before it took it out on Tuesday, It was just topping on the 27.40s. I actually did short a couple times there too. Had a little scalp off it, but it did take it out there 27.5, and he's gone now. So now it can move up a little bit further, maybe.
It's funny how you can look at two charts here. You look at the daily, and you're like, "Oh my God, that thing is looking toppy
Yeah.
here," and then you go to the weekly, and you're like, "Oh yeah, it's still." But then you go to the monthly here, and it
It
looks
used to be a
like,
$60 stock.
yeah, it looks like the well, that was pre-split.
You got to go back. Oh yeah, if you go
Yeah.
even farther though, go back like you can go back like 2001, 2002. I don't know if you can go that far back, but this used to be a $60 stock.
Yeah.
So we're still way off where we were back, basically back in the tech bubble. But even if you go back 2008 before the financial crisis, yeah, we were in the 40s. So, and then what did it get down to? What is that low there, right in the financial crisis? Went like $5 or $4.
I'm gonna
or
just
something.
take a guess.
Oh, you're taking it even further back. You want to really see the bubble in GE. This was back in the day.
I think I'm gonna guess.
Now the chart looks ugly. It's funny how a chart can change. You're right.
I'm gonna say like 563 here, but let me pull up.
I'm gonna go hunt it down. I got it. It's actually 572. It got down to when Warren Buffett came to the rescue.
Oh no, you're wrong about that. You're wrong.
572. I'm wrong with the price. Or Warren
Well,
Buffett.
you're wrong with Warren. Warren's actually Warren did not do us as well on this one. He stepped in when this thing was like 25, 26, 27. I think he
I
did.
stepped in too early.
Yeah,
he was earlier. You're right.
Yeah, he did very well on the prefers that he had. That they paid him like 17% or something.
That's like crazy, huh?
They paid him something crazy, but I think his options were at like 25 or whatever, and I think they were only good. I think they end up like taking him out of the rest of his position.
I think so. Goldman too, because he had options on that one too, and they took him out on that too. So
yeah, he stepped in a little bit early. I mean, he wasn't anticipating this going into single digits back in March of 2009, bottoming at 5. I have 573 on mine, but who's going to make make a big deal? But going back on the upside, Dennis. I know you hate when I get bullish like this, but I was looking at the charts here, and when it came down off that 30 level, there just wasn't much there. And I think the same going back on the upside here. You're looking at 29.28 was the high back in September of 2008. So I
you
mean,
think Santa Claus can push it up through that by the end of the year, or that's too much? That's too far, maybe.
You know what? I'm going to buy the 30 weekly calls, and I'll let you know.
No, are you?
No.
I'll sell you the 30 weekly calls. I'll sell those ones to you there, Joel.
Maybe in June the stock will be at 30 if if everything continues in the market.
I don't know. We're starting to go parabolic here. Look at that Twitter stock. Bring it up there. I cannot believe this stock. It goes up like $5 every day. That's just the new cool thing to do. We'll just rally $5 every day. It's already up another $2 here in the pre-market. So right on track to get us another 3 points and probably go up another 5 points a day. Just unbelievable here. If we look back to the beginning of this month, yes, this month, this was a $40 stock. It is now a $72 stock. So quietly, Twitter has now nearly doubled in the last 15 trading sessions.
Wow.
That is just
what's
an insane move.
Wow. What's going on with that? I mean,
it's a cool thing to do.
Everybody loves it.
It's the cool kids are doing these days. What are you guys doing tonight? Oh, we're buying Twitter.
They're not.
This is what you call. This is the herd now. Now you're seeing the herd jump in. Get me in. This is going to 100 tomorrow. It's gonna top out here in the next 2. I'm gonna say it's gonna top out here at the end of the week and show you the high for the next 3 months, but I don't know where it is. So I think it's just gone parabolic here. I think it's gonna top out and it's gonna have a really ugly day in here somewhere. But I just don't know where that is. This thing could be at $85 and then reverse. But it's going to top out here in the next 2 days. Next 2 days, you're going to see. Well, I'll say you're going to see the next 52-week high because
it's already there. Yeah.
Yeah. Well, the year high, the high for 2013. I'm not going to say you're going to see the high for 2014, but I think it's going to top out. I think it's going to fall like 20%. I think within the next 2 days. But I don't know where. It could rally another 20% before then. So
why?
That's my prediction.
Why do you think that? What would lead you to believe that?
This is what happens. These things just start to capitulate. You know how we used to talk about it on the downside that you look for capitulation. Well, you look on the upside too. And I honestly thought maybe it's going to do it at $67 on Friday. I actually did put a short out there and shorted because there was some guy sitting at 67, and you could just tell it was like an algorithm. And it kept refreshing. watching. So I was like, well, I'll short it. And I actually got a point off of it. I shorted 67. I covered 66. And then I'm lucky because it probably would have went back up there. I probably would have did it again, but I got sidetracked and never did it again. So, and then it obviously blew up all the way to 70. And now it's at 72. So it's just gone so parabolic here. I mean, this is how these things always end badly. And I just think it's going to end badly here in the next day or two. I think it's going to get up to like maybe like 75, $76 and then just turn around and puke. But maybe not. Maybe it just goes up forever, Joel.
Okay, I'm just gonna wait reserve comment on this a little bit because I'd like to see at least some kind of a double top or some kind of consolidation. I mean, now you're gapping, you got to at least look for some kind of formation back when it was like it broke out over 55, then had a quiet 3 days, and then broke out. I'd like to see that, at least a couple days in consolidation. Today doesn't look like it's going to be the day, but you can use Tuesday's high 70.87 as support, and that's about all I can say about that. But Jay is jumping in here. I haven't looked at FedEx and UPS in a while, and he wants to know if FedEx gets a bounce here, and what's bad for UPS is good for FDX. I mean, don't they usually move together pretty much, Dennis?
Those stocks move very well together. UPS a little bit more lower beta than FedEx. FedEx has a higher beta, but UPS, I believe, it's close to making a new all-time high on Friday. It got up to 104.56 back 3 days ago. I keep saying Friday, but it was Tuesday. And then obviously got up to 104.50 there on Tuesday. So it's trading, and it's just bid at 104.41 right now. But this thing's basically just been up there at all-time highs. And the same thing with FedEx. I know it pulled back a little bit there on Tuesday, but this stock broke out from that 140. It was a big breakout. It's coming, and it looks like it's trying to almost retest where it broke out from. It's bid up here 53 cents this morning, though, at 142.53.
Double top 43.44 and 43.73. That's the all-time highs there. So you can look at that as a resistance point. Off that, it's away we go to what, 150. The next half number in that.
TSLA at 145. A little guy for 16,000 shares. So maybe that'll be the first stopping point.
Okay, coming back on the downside here, 141 I think would be the safe level. Had a low at 41.62 and 41.14. So if you're just trying to ride the wave here up on the upside, perhaps $1.50 away from here under 141, you might get a little bit of a pullback, but it looks like it's free to test the all-time highs. And then looking at UPS here, it's kind of like the stepchild. It doesn't move quite as much, or hasn't made the same kind of moves. I don't know, maybe a little bit bigger institutional holding in this, Dennis.
It's got a bigger dividend too, so you get a few value traders that are in there on that one too, and that dividend holds down 2.37%. I think the FedEx dividend is only like 0.5% or something really small. So UPS with a little bit bigger dividend, which probably adds and makes it a little bit more of a conservative investment, and probably lowers the beta a bit. But yeah, it's you can't argue with that chart though. I mean, it's just going straight
double top 104.50, 104.56. That is the only resistance you have in this. Coming back on the downside, it's interesting here. You are trading right. I don't know. Is that an odd lot there trading? Yeah, I see a couple odd lots going on here. At 103.94 was the low on Tuesday, trading down 44 cents here in the pre-market on a whopping.
It's 20, up now, yeah.
Yeah, 25 shares. So good support.
25 shares. 104.41 bids. So that just strike that from the tape. That's the one thing I find annoying with the odd lots is you look at it and you're like, oh, it's trading down 40 cents. Oh no, it was like 5 shares a trade there. So just strike that 25 share from the tape. I know we want more transparency. You want to see it. It's kind of annoying though when it's changing your last. And some of the software, there should be an adjustment or something on some of the software to not let an odd lot change the last price, because I know even on some of my filters, I'm looking at a stock and then all of a sudden the stock's trading up 10%. I'm like, what's going on? Oh, like 5 shares traded there, not 500, like 5. So, obviously that's just something weird happened, or somebody trying to paint the tape with odd lots. And, you just got to strike that from, your own tape there, because it's not really a real trade. It's just an odd lot, little random garbage trade. So when it's that small.
And you know what? Right as we started talking about FedEx and UPS seeing a price target raise from Argus Research on FedEx from 122 to 173, crossing the wire just now. Yeah. So I don't know, that analyst is seeing about 20% upside.
But what if you already sold it at 122?
Well, you gotta start buying some more.
Okay.
They do have a buy rating on it still.
Okay, so they didn't tell you to sell.
Nope.
Dennis, now another question here from Mark, and I know you don't have the exact answer on this, but how many trades do you make a month?
Um, Man, if you would have talked to me 5 years ago, Mark, I don't even, I was making like 400 trades a day 5 years ago. But now with the high frequency traders, you can't be as much of a scalper as I used to be. So I hold my trades a little bit longer. I would say I still probably am making 30 to 40 trades a day at least. So 30, do the quick air math there for me. If you say 40 trades a day times what, 20 days in a month, was that 800 trades a month?
Right,
Something like that.
800 to
Yeah,
1,000.
that's probably 800 to 1,000. So, and like I say, I was used to be trading back in like 2008 in the financial crisis. I was making like 400 trades in a day sometimes.
And
So literally, I can remember like just sitting there and making a trade like every 5 seconds. And I have some algorithmic software that would run for me too. And sometimes it would be making me like 10 trades in a second for me, some of my own algorithmic stuff. And I don't consider myself a high frequency trader, but definitely I make some trades. So I guess if you look at me like if it's like Warren Buffett looking at me, it's like, oh yeah, you're a high frequency trader. You're trading 300 trades in a day. You're definitely a high frequency trader. But it's all perspective, and those guys are trading millions of trades sometimes in a day. So I'm just an active trader, and I probably am now making about 30 to 40 because I've lengthened my time horizon. Because, like I said, the high frequency traders have kind of monopolized the spread. We've talked about that in the past. And they've, become obviously, I can't compete with them on speed. So I'm not sitting here and grabbing pennies. I used to come in trades and I would just grab, if there was 2 cents there, I'd grab it. And, they're just, this is not worth it anymore. The risk is a little bit too much high, and you just can't get those 2 cents. The high frequency traders beat you to it. So I've kind of become like a real day trader where I'm holding stuff for hours, not for seconds. And that's made my number of trades go down.
And
I would say.
And what about your monthly volume? I mean, what was that? What was that at the peak, and what is it now? I know.
Yeah, it's dropped a lot too. I would say at the peak, my monthly volume. Oh, I had some monthly volumes where I was trading like 5 million shares, like crazy amount of shares back in 2007, 2008. And yeah, my monthly volume, a lot of months now, is like 400,000 shares. So it's just a fraction of it. And it's not a matter of, I'm just, trading a lot less. I am trading a lot less, but I've lengthened that time horizon. So I'm holding stuff a lot longer. Like I said, where I was holding stuff for seconds before, now I'm holding it to minutes to hours, because I think that's the sweet spot now. If you're in here trying to scalp, you're competing with the high frequency traders, and only one, firm can win the race. And it's going to be those top 3, 4 firms. So why even bother competing with the Citadels and the Geckos and the Virtues when you're not going to win that race, you're not going to win that game. So what I've done to fight that off is I've lengthened the time horizon of my trading a little bit, and obviously my expenses drop because of that too. But as I'm holding those trades a little bit longer, I'm trading in a time period that I don't think there's that many other traders, not that many high frequency traders at least trading in that time period. So I think that gives me an edge. So yeah, so my volume has probably dropped by like 80%. But I'm still doing pretty good actually, because instead of making a penny on my trade, maybe I'm making a nickel. And if I'm making a nickel, then I'm still in the same boat. So that's how I've so my volumes come down. So.
And where is your volume going to be today? Is it going to be? Is it going
It's
to be
zero right now.
Really?
I haven't.
You're not
Yeah,
even.
usually the pre-market I've made a few trades, but I have not even made a trade here yet in the pre-market. But it is Boxing Day up here, so I'm trying to take it easy.
Yeah. Okay. Do we? No, so you mentioned anything on the ratings front here? We mentioned that UPS upgrade. Are the analysts taking the day off as well?
Brent, I'll throw that one to you.
Yes. The
Yes.
answer is
Short
yes.
answer, yes.
Yes.
And it's taking the day
Plain
off.
and simple. Usually I get I don't know, maybe like 10 to 15, 25 headline pages of ratings in the morning. I got like 1 page of ratings this morning, so
Read them
yeah.
off. What do you got?
I got Eagle Rock Energy, EROC, upgraded
Yeah.
from underperform to market perform by Raymond James. I got Argus Research raising the price target on FedEx to 173. That's what I got. Hope that helps, boys.
What was the news on Apple at the end of last week? I saw it had the big
China
gap.
Mobile.
Apple. What was?
They signed the deal. They actually got the deal with China Mobile.
But
They got the deal done. CHL.
But wasn't that already done?
It was kind of like buy the
Oh,
rumor,
listen to
buy
our
the
show.
news.
On vacation, Joel, we analyzed the hell out of this. We were saying we knew what the deal was worth because the first time it was rumored, it rallied 20 points, and then the deal didn't go through, and it fell 20 points, and then all of a sudden, the deal comes back and it gets done, it rallies 20 points. So I guess we knew the deal was worth 20 points.
But they couldn't take it back up to that 575.14. Wasn't that the former high there? How come they didn't? How come they didn't take it back up to that level when the deal finally went through here?
I don't know. I guess they didn't feel like taking it that high.
Yep.
The high frequency traders who are controlling the market didn't feel like it. That's my answer.
So you got the gap up and Apple here. Closed just off the low here, so we'll have to keep an eye on that one. What do you have for a close on that? 567.67?
That's what I have. That's what my system says. Is it right? 567. Actually, yeah, 567.67.
Okay.
Trading up right now at $1.70. I've got a tick, an odd lot, if you look at that, of 569.37. But getting rid of all those odd lots, 569.40 was the last print that I see there actually. So that would put it up $1.70.
Okay. You had the high on Tuesday, 571.88, and then above that, if you do take that out, you get up to the former high of the move, December 5th at 575.14.
What are you thinking? This one participate in the Santa Claus rally and make a new high here?
I don't like those big gaps in stocks. I don't know. I'd feel more comfortable if it came back down and filled that gap. I could be waiting a very long time.
You don't like the gap and go?
I don't like
the gap and go.
Especially when it didn't get back up to the original price when the deal was announced, or supposedly it was announced, 575.14 here. Had a real quiet range, a 5-point range, 6-point range on Tuesday here. So I think there's more downside under 566 than there is upside above 572.
You know what is impressive though? As much bad press and as much sentiment's been the hate on for Apple all year here, the stock's at its 52-week high. That's kind of impressive after everybody's just beat on Apple and say, what's wrong with that? Remember the beginning of the year, of July, everybody had Apple for dead. It got down to like 390. It's been a pretty good last half of the year for Apple. Quietly, this stock has been one of your best performers.
Well, from the low, it's been one of the best performers. But overall, it's basically up just a few percent on the year.
Yeah.
I mean, what you got down there, you made the lows, you washed everybody out. I actually got, I remember talking about this with Brent. It got about 10, 15 points away from the day that Steve Jobs died. And I believe it was trading around 375 around that. And then there was a little mixed news. And then, boom, we all know what happens after that. It goes up to 705 and change, and then came almost all the way back down to that level. But then they instituted the dividend, so you got a little bit of your value players in there.
Yeah.
And then you had the icon effect, and that was right around the 550. I actually remember that because I was playing some of the calls during the summer. And the 1 week that I didn't have them on, it was back in August. And I was out of the market on this thing, and I was watching it. And Icon came out with a little tweet, and boom, that took it right up, from 560, 570. Or no, 460. What am I talking about? It was back in August of last year, and he gave it the boost there, initially up to 500, and Mr. Icon's got a good trade going again.
Mr. Icon has had an awesome year. Look at his stock, IEP. That's just been unbelievable. I mean, in the last month, it's been rough because it really went parabolic there. It kind of looked like the Twitter chart. This is what I predict the Twitter chart will look like in a month. But but anyways, if you bring up the IEP chart, you can see how it just went from 80 all the way up to like 150. And then everybody had to own it at 150. The herd was jumping and everybody had to be in, kind of like I say what's happening with Twitter. But and then boom, boom, boom. Lost 40 points there in 2 days. And now it's kind of settling in here, though. Look at this
is this is a very interesting chart. Did they? I believe before I left, I thought there was some kind of rumors of a secondary. Did they ever come out with a secondary? Any kind of pricing on that, or
there was something? Wasn't Icon just selling a few shares or something? Or I don't know if it was huge. I think that might have been what knocked it down. Brent, do you remember what knocked it down there? Was that what it was? That Icon was selling a few shares of his own stock?
Yeah, that sounds right.
Yeah, so that's really what, oh, Icon's selling his stock. I got to sell his stock too. So it went from 150 to 110 on that.
But a
So
couple days of just wicked consolidation here. 2 point range on the abbreviated session on Tuesday, finding support at 115, and then the last three highs, using 118.50. I mean, it did settle near the lower end of that range. I'd be keeping an eye on 115, but really looks like it's really winding up here. I mean, you had this kind of consolidation back in late November. You had almost an identical technical pattern, and then it went from 115 to 140 here. So gonna keep this one on the radar here. Maybe get a cheap look at some 120 calls or something on the weekly or whatever, because this thing is definitely winding up.
check out the chart of BlackBerry from the last 3 days. They came out when you were away, Joel. They came out and they just announced the worst earnings report ever. And guess what the stock does?
Did it rally?
Oh, did it rally? Did it rally? It took those shorts and just took them behind the woodshed and just pounded them and pounded them and pounded them. Everybody came in that morning selling the stock in the pre-market. It was trading down like 575. And I was like looking at this and I was like, this could be one of those situations where they actually might rally the stock on this horrible earnings report just because everybody is short and everybody is out. And that's what happened. Sentiment turns, and it was too bearish, got too bearish. Everybody's like, it's going to zero for sure, maybe today. And they punished those people. It turned around. It was down. I don't even know if it was down in the pre-market, actually. I think it just started taking, or in the pre-market was down, but in the regular session, I think it opened above 6 and never looked back, just straight up on those people all the way through the 7 handle. And now it's just continued for the last couple of days, and I actually got it up close to 8 there, $7.80 it got up to on Tuesday.
Was there any news? I mean, did anybody come on?
The earnings, it was the earnings.
It was bad.
Terrible.
Okay, so it rallied on bad earnings. Okay,
Brent,
so
go hunt down the earnings
yeah,
report
you
again
guys,
from
I
3
go
days
away.
ago.
I go
Because we
away.
gotta fill Joel in on these
I
earnings.
go away
because
for a week.
They weren't just bad
I can't
earnings; these were
take a week off.
catastrophic earnings.
I can't take a week off. You guys are telling me that a stock rallies, 20% and on terrible earnings.
Yep.
There's no fundamental news. There's no upgrade. There's no new deals on the table.
There was a Foxconn deal, so it's not
Okay,
entirely.
thank
It was just on. It was down on that news though too. It was all just everybody leaning the wrong way. Everybody got too bearish of the thing, and this is just what you call a classic short squeeze. Kill those shorts.
All right.
People were thinking it's going to zero. Wrong. Not yet. Nothing goes straight to zero, and this is the pain. And it's on the pain train right now for the shorts.
The pain train. I think the Foxconn news was sort of like BlackBerry's attempt at some kind of saving grace with that huge loss, 67 cents per share. Not
And what
not
were
nice.
the estimates?
43-cent loss.
And they lost 67.
And then the sales were like under 1.2 billion, and the street was over 1.6 billion. So the sales pretty much are even worse than the loss number there.
Just a little
Yeah,
miss.
I mean, it looks like you're running out of a little bit of steam here. Potential double top, 775, 780. Low risk short here up to that 804 level. That's when I guess that's when it gapped down, is when the $9 deal fell off the table. But we'll see. It's struggling 775, 780, trading down 10 cents in the pre-market. You've had a 1, 2, 3, 4, 5-day run in this dog here. So if you're looking for a lower risk short here, you got the double top 775, 780, and then you have that high on November 1st at 804 here. Jay's popping in here, and I guess it's a stock that it's his mom owns, and it's the best invention since peanut butter on white bread. But for people that are allergic to peanut butter, like myself, I don't know if I'm going to like this stock here. It's Organonova Holdings develops. Is this right? Is he joking with us here?
Develops three-dimensional bioprinting technology for creating functional human tissues on demand for research and medical applications. ONVO is the symbol. He said he exaggerated on the peanut butter.
I don't think so. I really love peanut butter on white bread.
Organovo Holdings, and I don't know that much about this stock, but I can tell you, we can look at the chart here, ONVO, and $8, it got down there. Man, it really went parabolic there earlier this month. They were about a month ago when it went from 8 to 4, almost 14, got up to 13.65, and then gave it all back bounced right off where it broke out from. So the classic old resistance becomes support trick. Got up 8, bounced back up, tried to get through 10 double digits, can't. The whole number theory holding it. This is all our theories in there. Back to 8, holding that number there again. So I guess, the bulls are defending $8.
I guess you could tell your mom that this thing needs to get back over $9 here. You've had that consolidation for over a month between 8 and highs a little bit over 10 here. Came back, tested the $8 level. I think if it gets a couple closes here back above the 9, you've only had you had that close at 9:01 on the 20th, but the last 2 closes have come down. So I think. I know it has 3D printing in there and biotech. I mean, you got all the what's this?
What else? What else do you need?
That's the recipe for a soaring stock right there. 3D and biotech.
Yeah, it's a 3D pharma stock.
3D pharma.
That sounds awesome to me too.
You know what? This is actually been the target of some Richard Pearson recent notes. Dennis, you know this guy, Richard Pearson. He's like a negative. A bear on Seeking Alpha, so this one has been kind of.
What's he saying about this stock, Brent?
I mean, he's just kind of overall negative. He's been negative going back all the way to like August. He's had another negative article in November. So I know I was trying to remember.
So he's been shorting it all the way up.
Yeah, exactly, exactly.
Dennis, don't come out with those conspiracy theories yet this morning. Little early.
Conspiracy theory. That's just wrong, maybe.
Just gotta hold $8. 8 to 10's been that range.
Gotta hold 8. That's what I'm gonna say. As long as this thing holds 8, say call it 7.75, give yourself a little wiggle room through the 8. Holds that, I'd stay with it. You start getting below 7.75, and then I start getting nervous because there is some air below $8.
Yeah, I guess I don't know when this company. I don't remember you covering the earnings report on this one. I don't know if it made that into the Benzinga calendar, but I guess you would want to look at the earnings pattern and wait to see next time it comes out for earnings. And I guess you do have to pay a little attention to Seeking Alpha. I think his article probably came out on November 18th.
It was actually the 19th. It looks like a little sell-off before that, but yeah, that big spike in mid-November probably attributable to that Seeking Alpha.
What was
guy?
And we had talked about this in a while. Was it NQ? Is that?
Oh yeah.
Oh, look at that.
Oh, good NQ
mobile.
mention. It's been so long.
Look at
Everything
that.
always ends badly, eh?
Well, look at this thing though. You haven't heard anything from Muddy Waters in a while. You got how many trading days has it traded?
Really consolidated.
Yeah, it goes from being the wild child to oh my gosh, look at all these lows. 11 in the 11 handle, 11.10, 11.12, 23, 32, and then bunching up at the $12 level. A bunch of highs in the higher 11s here. So this will be a one to keep an eye on here. Breaks below 11, we could be going back to zero. Muddy Waters target, and it just seems though that the news that's been coming out to save this company really hasn't done that much for it. It's just sellers are just clamping this thing down.
Actually, you know what, Joel? Carson Black from Muddy Waters was making the rounds as recently as like December 19th. We got a couple of headlines in the pro feed on it, but he hasn't been saying anything new. He's sort of reiterating that same old story that he's been talking about for a while.
Well, either way, the stock's waiting for something, I think, to break here, either good or bad news with that consolidation period. So it looks like it's just trading in a little range until we get something to break it out of this range. From a technical perspective, the stock's got to hold $10. I mean, it starts breaking below 10, and then that is really ugly. And then on the upside, I think your resistance well defined too, up there in around 1230, 1235 area. So I guess until it gets to one way or the other, maybe you sit on your hands on this one.
Okay, let's finish up with a couple of the other hot rods here. That
Facebook.
Well, I'm pulling Tesla up here first.
Oh, you want to go Tesla first? Okay.
Yeah. I mean,
hot rod. I should have got it when you said the hot rod comment. I should have known.
Yeah, this thing.
He's witty. He's been away for a week here, so he's really witty right now.
What it had to gap up on Tuesday. I'm not sure what the news was on that. I was at the beach, but it got the gap up here, and now it seems to coming into a little bit of resistance here. Former highs of the move, 154.90 and 154.63, 54.97 high on Tuesday. break out? Are we finally going to go back to that dreaded 160 level? Remember how
We've
long?
been itching for that, Joel. We've been fighting for that 160 for a while here now, and it's been a battle, I tell you. We got up there a couple times, the mid 155s, and then sold all the way back up to 140. Gave you one more shot to buy it at 140, and like, oh, I want the shot. Now 3 days later, we're back 155 again. So I think eventually we're going to 160. I still think this thing's going to see 160. I don't know if it's going to see it today or not, but I think it's going to see it here by the end of the year, 160. And then I don't know what happens after that.
Right, and I believe the one we've been talking about the 50% retracement from that all-time high. I believe is like 194 and change, and then we had the low at 115,
16.10.
yeah, 116.10. So I believe the whole 50% retracement area takes you back at 155, 160 area. But this thing is slowly, fought its way back. I can't remember who gave it the upgrade after I sold my weekly like 130 calls. But I don't know, was it a Morgan
That's right.
Stanley? Kudos to that analyst. They nailed that. The thing is back on the path here, going back up to 160. And then Facebook, you wanted, where's that at? $90? I don't know. Let me take a look here.
It's straight up too. They all go straight up. Making new highs here today. Actually, no. Check that. We got up to 58.58 on Friday. We're only at 50, or on, I keep saying Friday, on Tuesday. It feels like it was a Monday here right now, but 58.58 was the high on Tuesday. It's 58.30 right now. So I guess that's your level.
And Dennis, you remember this level very well, don't you?
The 58 for me trading it after hours that day, that's where it got up to, and that's where it burned me. I decided short at 55 on the way up on the earnings report after hours, and within 5 seconds the thing was up at 58 on me. I was like, that was a silly trade. That was a dumb one. That wasn't one of my better ones. Then it came down like 56 and I only lost $1 on it. I was like, thank you. So all that, if you look back on the chart in October and you look at all that blank air up there because it only tracks intraday, I actually lost money up there. So it's not even charted.
And then that day,
so you can laugh at me on that one.
And then I think that day, I think it ended up holding. I wish I could remember what day that was. On the when they came out with the earnings. Yeah, there was. I think it had a real. But did it close under 50 that day? I can't remember.
It was like October.
Was it
the 20th or 18th, 21st?
Yeah.
Brent's good. He'll find that in seconds.
No, but
No, what do you mean no?
What do you mean no? Brent's good. He finds everything. Brent will be all over that.
now, what do you
Hunt
do
it
with?
down right now.
Well, the only thing you have
I'm
to.
looking at the chart. I think it was. I'm gonna guess it was either October 18th, October 21st, or October. No, I'm guessing it was October 22nd. No, wait though. Maybe it wasn't. It was before that. That wasn't the time it was up at 55. I'm saying it was actually. I'm changing my mind. I'm saying it was October the 8th.
Okay, well, we'll hunt that down. Quick note here, Slick is looking at the odd lot trades here in Twitter. Yeah, I mean, our odd lot trades, 72, 29 last, painting the tape, taken up on absolutely nothing volume. But, what can you say about this stock here? I mean, if you are looking to short it, or you are looking to, use it exit long, I just say you have to go to see what's trading at 928, 929, and use that as a parameter because it's just floating up there. A lot of times, the pre-market highs. Right now, you have a pre-market high at 72.54, so just keep an eye on that. And then just to close out before we bring
I was gonna say before you go off the Twitter, I want to learn from my Facebook trade, and this is what I sometimes do wrong. I think I'm a hero and I try shorting the stock on the way up. Don't be a hero. Try shorting it on the way down when it's coming down. So I'm going to wait for the big reversal day. When the reversal day comes, which is going to come in the next day or two, I think, that's when I'm all over it. It could even be today. Who knows? Eventually, this will have a reversal day where it all of a sudden starts going down and starts trading, opens up strong like something like today, and then all of a sudden takes out the low or takes out yesterday's close, starts going red, and you start seeing everything.
Okay.
And you'll be able to tell. That's what you need to wait for.
Okay, we got to take a quick break here and get Fari Hamzai on, founder of Hamzy Analytics. He could be our special guest here for his comments on the market. So we'll be right back. Welcome back, traders and investors. We have a very special guest on today, Fari Hamzai, founder of the firm of the same name, Hamzai Analytics. Fari, how you doing this morning?
I'm pretty good, sir. How are you?
We're doing good. I'm kind of, these guys are beating me up a little bit here. I'm just back a little bit slow, but back from vacation, but getting in the mode
Sure.
here. And just real quick before we delve into things, could you just give us a little bit of your market background and your education?
We'll start with education first because I did that a little bit and then I got into the market. But my background was at 16, I entered Princeton for financial engineering. Back then they called it operation research, and a little minor in political economy. And a little bit, I dabbled in also what's called the Woodrow Wilson School, which is international politics and so on. But that was a minor. Main stuff was really operation research. And then got hired by Northrop on their manufacturing area because they really needed to use OR to optimize what they were doing on the 747 line and F-18 line. And as I arrived there, we're originally from Iran. I'm a Persian American. My dad was an officer with the Imperial Iranian Air Force and a pilot of the Shah, and he also had a diplomatic position earlier in Washington. So his name came up. We had to get him out quickly, and also he had left everything he had, came up with his shirt on his back. So the little cash that he had in his pocket and a couple of accounts here and there, I was destined to put a little nest egg for him.
No.
And it all happened in March of 1980. We had a silver crash, as you recall. Hunt Brothers tried to corner the market. Dow was 729. That was a Thursday. On a Friday morning, we took some cash, went to literally cash. I mean, we went to a bank, take the BLV, take some cash out, went to Merrill Lynch on Torrance Boulevard and in Los Angeles, or better known as Terangeles now. And we start buying. And the Dow was 729. It's all in my book, Master Traders. And we bought the Dow. We bought the Buy America concept. The shearing plow, Eastman Kodak, IBM. Let's see, United Airlines. The main names that were instrumental in the U.S. economy. And when you're getting, you have a huge push down in a price with a spike in volume. That's usually a buy signal. Now, I didn't know any of this back then. I had a classmate who was working on the floor of NYSE. I just happened to get hold of him that Thursday. And we had a 30-second discussion. And again, that's also in the book. And he said, "Buy America." And that was it. And he hanged up. These guys on the floor are busy. So I did. And the next 6 weeks, everything went up every day. My dad thought that I was the smartest kid on the block. Well, when you buy that 729, that happens to you. And then after that, we start selling some calls on it when we start to asymptote out and flatten out. We start selling some calls against it. Then again, I didn't know nothing about options, but I called in the Northrop library and said, "Bring me the stuff. Let's look at these articles, that article." Usually mainly they worked at Eugene Fama, let's see, Myron Scholes, Fisher Black, and Robert Merton had worked on. So I started diving into that, and of course at Northrop in that area I had a lot of computing power. So I start programming Black-Scholes model in my handheld machine, and next thing you know, I had a little trading operation going on. Now Merrill Lynch was calling to figure out if the options were over or under. Overpriced or underpriced, yeah. I almost got fired because of that.
Okay, they were calling you.
Because you're supposed to work on airplanes and assembly lines and figure out what man loads are and skill mix. And here I am trading, floor, shearing plow, Eastman Kodak. We were doing simple stuff, nothing exotic, because I didn't have that much knowledge. I was trying to teach myself. But, call verticals, a couple of calendars, dove into, butterflies. Never had luck with butterflies. I gave that up. And then later on, as I learned more, and I applied it slowly, we started doing some back spreads. I love back spreads. But, you sell the front week or front month or whatever have you, and you buy the back end and the size. And if you do it right and your timing is good, of course you got to use some charts. It explodes, and in the right condition, right market, it goes. So that was March of 1980. Very basic stuff. Start with stocks, and then stock options, and then of course I was not really trading; it was really investing. Positions were several weeks long at that time. You didn't have the internet. You didn't have the activity you have now. Everything was on phone calls and looking at daily graphs on the weekend from William O'Neill and Company, which is also all in California. As you know, that part of the country is a lot of technical analysis started, mainly because of the rocket scientists and so on. And I found a niche there. I understand their language and start doing it slowly and very methodically. There were times we kind of also pull out of the market because I was busy with other stuff work-wise. For example, we completely missed the 87 crash, which was by total luck. It was no skill. We had pulled out stuff in July of 87, so we missed the peak in August. But we also we managed to be out during the downdraft that went down into the 508-point drop, 22% on SPX on October 19, 1987. Did not re-engage back in. I was involved with a couple of financing companies and so on until about first Gulf War. At that time, I had a financing company, and a lot of times early in the morning I had time to myself because hours are different in California. And I started trading XMI options. And there was a software called OptionView, which a lot of people on the floor use it back then for market making. I just got a copy. It was like at $800. And if you play it right, the first couple of days, you get the software money back. We were just playing the changes in MIVs. The MIV screen up, as the MIVs would change, I would play the calls and puts. It also gave me a signal about when we were going to go into downtown Baghdad. Why? Because about half a day before that, all the MIVs exploded. So that was an interesting thing to be able to say, head of CNN from where they were at, I think, Rashid Hotel in Baghdad, where they were trying to see if, when we're going in. Here you could see it on the MIV screens off of the market makers in Chicago. So
wow.
You think information is all kept in and it's all secret? Forget it. Don't be so naive. Market will tell you in aggregate. In aggregate, the market will tell you what's going on.
Market is so much different back then. Like, it's an awesome story to hear this because we have so many new traders that are obviously coming in. They weren't around in the 80s. So it's all awesome to get like a background of how it was done back then. Like even when Go ahead.
Go ahead.
I was just going to say, even when I started in 99, it took like 8 seconds to get a fill. How long did it take to get filled back then? Like when you
would make a phone call, you place your order in, you go and get a cup of coffee. Okay, you come back, wait for the call to come back to you. And they'll call you back and say, hey, there you got it. Basically you're rolling a dice in terms of what the fill is going to be approximately on the stocks. When you're talking about options, given their spreads, you're rolling several dices. That's just the nature of the beast was, Look, we were using Apple II to do a market making, valuation with a teletype machine from the office that would dial into, because Northrop wouldn't let you have your own computers. So the Apple II was sitting at my home. I would use a teletype to dial into my home, get the pricing up, and understand it for how it's going against the underlying, and get a feel about where it's over and under. Because as we grew, as I did more, I learned more to do it better, and no longer you could do it on a handheld. So our Apple II was one of the stuff back then we could use. And I use Marty Zwick's book for market timing. I've been always interested in market timing because I don't believe in buy and hold or sell and hold, sell short and hold. No, you really need to look at what the market is telling you. You need to understand the message of the market. And the way you do that, very basic stuff, if you read the Marty Zwick's book, Dr. Zwick, which is the guy who came in with the put-call ratios, simple put-call ratios. In his book, he talks about simple things. Now, they can't apply it now anymore that easily because Fed has changed. But back then, you look at what the Fed fund rates were were the first three changes in the Fed fund rate war to the upside, after a recession, as the Fed would go to 1, 2, 3 raises. That's where your growth to the top, the movement to the upward will start. The other indicator you need is the advanced decline line, net advanced decline. Now, the advanced decline still works. As a matter of fact, you can even use it for even as short term as S&P trading these days. But because of where we are with the Fed, no longer the interest rate model works. So you have to come up with more sophisticated tools and models to be able to guide you kind of throughout the day or throughout the week, if you will, trading. The next step after that was that right about when Clinton was coming to the office, I came up with a neural net model using Spark stations, which is a Unix machine. Back then, Sun was making them. That's right, Sun. That was a division of Oracle, and no longer make that machines because they were just really a software company for Java. But when they were making the hardware, back then those chips were much faster than Intel. Intel has taken them over now. But back then, that was a big machine. And we used the neural nets to guess the 15-minute forward price of Treasury bonds, the U.S. Treasury bond futures, using existing price structure and a couple of other inputs, for example, like dollar index, all in real time. And we had to train the machine, and then you let the machine take over to give you your buy and sell signals. Which from there, it led me to actually get into more analytical work, and for graphical work, we had to switch to TradeStation because we're tired of building our own software. There's no point of building something that's not proprietary.
Right.
Moving averages are moving averages. You shouldn't be spending time doing that. You can have a software that's built in. And the only problem we had then was by then I was managing money and I was going full time. This is early 90, like 92, 94. Lloyd Benson one day woke up and said, "We're not going to have a 30-year bond for a while, new issuance, because we're going to have possibly a surplus. So we're not. The government's not going to borrow 30-year anymore, and we maybe start paying him down." Well, that created a big supply issue. Now the supply was shrinking. Guess what happened? The prices jacked up, and the neural net had never seen that. The neural net is like having a child brain on a silicon. You're training it, you're teaching it good habits, and you're also teaching it what's called forgetfulness. You want them to forget bad habits, okay? So that to get you the right trade and avoid the wrong trade. Anyhow, but that we had never seen. Never in the history of bond futures we had a situation where the sitting Secretary of Treasury had come and said, "We're not going to be issuing new Treasury bonds, the 30-year." Well, why was that important? Because that's a long-term asset. Well, people who had long-term liabilities, like insurance companies, pension funds, so on and so forth, they needed to have the treasuries in hand against the possible payouts they would have. Because this is a known, it's credit and faith of the U.S. government. You know the principal and interest is guaranteed, period. Well, because that supply shrank, it was a rush for them. There was one day we had a 3-point move. 3-point move in the bonds, the limit up. I mean, it devastated the neural net we had. So we stopped. We were ahead, we stopped. We said, "Listen, guys, we need to go back to the trenches and do another huddle. We got to figure this one out. This is very different." And by the time I was doing this, I got to know this one little thing called S&P 500 index futures. Forget it. Once you trade S&P 500, you'll never touch anything else.
So
I mean, it's worse than a drug. Okay, the moment you trade this baby, forget anything else. You won't touch anything else. And I'll do the math for you. It's trading right now at 1833. The multiple is 50. So it's a $90,000 stock you're playing.
Yep.
correct.
And you're up against the best of the best.
You are.
The best
you
and
are.
brightest are in that space.
So Farah,
And
you're with you're a lot on market timing, right? And
Yes,
you
I'm ranked with Time and Digest, correct.
and you are one of the top market timers out there, and you've written these books. And two-part question here. One is,
Yes, sir.
how would you convince people that aren't market timers? Okay, what would what would be your arguments to convince them? And second of all, since you're a market timer here, and we've had an unprecedented run in the market here, we're trading in new all-time highs here. What are your proprietary analytics? What is your timing telling you? What should investors be looking for right now?
Well, we're long here, and we have intermediate targets we watch. When we were short, we also had intermediate targets on the downside to watch. We also look at volume. I mean, look at it this way. It's a lecture. If I want to go through that, we do market timing webinars the day before non-farm payroll, once a month, and it's massive webinar. It gets very busy. I spend about an hour and a half just on the charts and what we go through. One of the things you'll find out is that no one indicator is going to save you. Okay? It's a preponderance of evidence. I go through probably 8, 9 charts, but predominantly, here are the things I'm looking at. I'm looking at vibrations. Remember, we're talking about financial energy. How do you measure vibrations? Like Bollinger Bands.
Okay.
I want to see what the volatility is. That's one. I look at momentum. These are very and momentum, trend, vibration, volume. How do I look at volume? Up ratio to down ratio. I always look at differences or ratios. Why? Because I'm trying to make the indicator more sensitive. Okay. Look, if I'm about to lose money, I want to lose it fast. Okay. I don't want to sit here and be an investor in some mutual fund or some Bauhaus stock that over the next 3 weeks is going to drip out of me. That's going to drive me nuts. I need to have more sensitive stuff available. Now, for example, a great tool for market timing, McClellan oscillator. That's another sensitive indicator. Why? Because it looks at a kind of a modified exponential moving average of advanced decline. Okay? Now, the key thing in these, Dennis, is how do you interpret these? Okay? And that's a journey. Look, I've been ranked by Timer Digest for at least 10 years now. Okay? In the top 3, top 5. Several times I was ranked 1 for both 90 days, 180 days, and 365 days trading. Okay? Now, the journey is such that you always make a couple of mistakes here and there, but you got to have what I call adaptive systems. That is, even if you're wrong, it corrects you back in.
Excellent.
It catches you're wrong and brings you back in. See, you can be wrong, but not for too long.
Okay.
If you sit in a market timing situation, okay, and let's say, for example, what we're doing. Here's my bias for year end, okay? Seasonality is up, okay? Seasonality is to the upside. So we just bought some call spreads. Now, what's the problem with call spreads? Call spreads are very sensitive. If I'm wrong, I'm dead.
Right.
If I'm right, hallelujah. Talk about shekels. I mean, you're just like your second Uncle Ben. You're printing your own money. Okay, I don't have the plates, but they're legal. I'm printing it. And now these we bought were December 31st. So they're going to expire Tuesday. And I don't know, we're up like 47% already. So between today, tomorrow, maybe Monday, I'll just flush them out. Right now we're up another 4 handles on the S&Ps, on ES, or in the Globex. We closed at 1833, so we're equivalent of 1837 on SPX, and these were on the SPYs. And the reason I use the call spreads because I want to remember I'm not the only one who knows this. There's a bunch of other people who know this too, and including your market makers, right? At SIBO, what are they doing to the option pricing? They're juicing it up.
Right.
So what does that translate to? You guys know better than I do. It's I saw you guys have both worked on our floors. You know what's going on.
Yeah.
When they juice it up, where is it getting pushed up? It's volatility. So you want to use a collar spread. So you buy one collar spread, buy one volatility and you sell the other. So the difference between the two crushes the volatility out. Yeah. Otherwise, yes, you are capping your return, but you're not paying through the roof for the one that you're long. Yeah, you got to do that. Yeah.
Yeah, because it's just way too expensive to do it. Just
Exactly. Outright is too expensive. Correct. And also, if something goes wrong, you're giving back heavy. There's nothing on the other side to compensate. See, you want to be short the other one. You want to be long on you're like, we're long 183s and short 186s. Okay? And beautiful.
Now, do you think you can get up? Do you think we can see that 186 here by the end of the year? Is that, or do you think
I don't need to.
That?
I just need to move up a little bit more.
Right.
I just need to move up. Already I'm in the money. Remember, I bought this was 182.10.
Yeah. Okay.
Okay. So yeah. The key point is your entry. Now again, how do you pick your entry?
Yeah.
Go back to vibrations. Volatility. Look at vibrations. Look at your momentum readings, and you time it. You got to be patient. When you get into trouble, okay, is, for example, I do a lot of trade with Google every quarter. Okay. Last one, Kyle saw it. I sent it to Kyle real time. I said, Kyle, little taste. This is Kyle Buzzy, your guy over there at Benzinga. I said, Kyle, have a little taste of this. He goes, what is this, $300? I said, well, I'm a poor boy. That's all I can afford. That $300, 28 minutes later, was worth 10 grand.
Holy cow.
Yeah, and that's what he said. Holy cow. Next time I want to get into this. I said, fine. Be my guest. I'll send you the next trade too. Now, how do you do that? That's a lotto trade. That's a different animal.
Good trades. Yeah.
Not every stock can do that. And, we get it probably once or twice a year. Not every stock would do that. And not every time it would do that. You just got to be at the right place at the right time. And you got to be patient. The thing about lotto trade is, you can't set it up 2 days before. It doesn't work. Ahead of earnings. A lot of trades are entered about half an hour before the market locks up. Before like 2:30 Chicago time.
Yeah.
Because why? You need a lot of variables to line up, and you've got to also find liquidity. Remember, we're going after something very unusual. Guess what? I need a sucker on the other side. Right?
Yeah.
If I'm on a right angle, I got to find some idiot on the other side to sell it to me.
True.
Otherwise, there's no deal. Otherwise, it's exercise on paper.
Yeah.
Okay? You want exercise on paper, go to SIBO. They'll teach you all these exercises.
Wow.
They have great teachers, too, but that's all exercise. Here is reality. When I pull that trigger, okay, we manage money. We have chat rooms. We talk to people in real time. Sometimes I would tell them also, this is a tough one. This is not for you guys. I'm going to do it myself. But if you want to jump in, just be ready. I'm going to tell you what the trade is going to be. Okay? But I will never front run anybody. There's no need to. Because there's plenty of time. The key thing is liquidity. At the area you're looking at, it's a vertical, and you're using Sigma channels, where you think the price extension is going to go. All you're looking for is really price discovery. Now, what stocks will give you that? Tesla, Netflix, Google, Baidu, Apple. These are the ones that would do.
Yeah.
You cannot do that with Johnson & Johnson.
Yeah, it won't move.
It won't move, exactly. The volatility isn't there. And now, some of it is a little bit also creative. I mean, you got to sit there and say, look, I was surprised Google did all that move. So I put a couple of trades below it. Not as good. They made 300%. They made 500% return. This one piece at the end, this was like for the really, really aggressive traders. And with a shorter expiration too. Like Google, I think it reports on a Thursday before a normal monthly cycle of options.
Yeah.
I think next one is 16th of January. So I would buy the 17s. The normal January expirations, okay?
Yeah.
And higher up. So I'm squeezing time, okay? And the price on top. That means I have a very small chance of making it happen. Thus the name Lotto. But if it does, cha-ching.
Bingo.
And last time we got it. Now, so a lot of times you get close. We had a very, very close call with Netflix. What happened with Netflix? As you all know, my schoolmate, Carl Icahn, came in the next day, had a fight with his son, and he sold 3 million shares. My pricing was exact. The opening print was where my vertical was. But the stock never stayed there. They sold so hard that the options collapsed.
Right.
So on that one, we lost money on the exit. But overnight, we had hit the lotto. But except you couldn't get out over option markets closes at 3:02 Chicago time. 2 minutes after the cash closes, options are closed.
Would you ever try to do the stock against the option positions, like try to hedge?
We have. On Google one time I had to. That was another one. This was like 3 years ago. I think 2011 or 2 years ago, 2011 or 2010 in October on Google, and it was we only made like 1,100%, but it was something we spent something like 40 cents on, and it went nuts. Now, the reason we could manage to get 1,100% out of that trade was that pre-market, this time of the day, I sold Google. I managed to find Google shares to short, okay? Because that's what happens. They push it up before the market opens, and now the market makers are under a lot of pressure. At that point, the market makers will sell into it. So what I do is that I sold the Google shares to lock in my profit, okay, against the long calls I had. That was a straight call. There was no vertical. When I had a straight calls, sold shares against it. As the market opened, I bought, the stock came down very hard. I bought back the Google shares and then sold the options. I legged in. You have to kind of leg out. 5 contracts, 500 shares, 5 contracts, 500 shares, or 10 contracts, 1,000 shares, so that you have some form of balance involved. Otherwise, you can't just dump one leg, all of one part of the strategy, and jump on the other one.
What do you think?
The movement is too fast.
What do you think about Netflix here? It's recovered all the way from the sell-off after earnings, and the icon, lightening up his position. You've come all the way back up. Got a potential double top, 83.43 and 83.96. Kind of a double bottom there too. Are you licking your chops on this one, or are you hands off for now?
Well, we're long at Netflix for about a week and a half. A couple of days it surprised us, kind of put pressure on us. It has come back last 2 days pretty nicely. The problem I had was on the 6th of December. Hold on 1 second here. There we go. I'm sorry. Let me tell you. No, let me give you the. No, I'm sorry. The 16th of December. Where my problem was. I am looking to see. I'm not sure I will see it or not, but my target is 391 right now.
Okay, a couple points away from there. So you just to finish up
well,
here.
No, not a couple of points. 11 handles.
Okay.
380 right now. 391.
You're talking handles in the S&Ps just like I do. It's good to hear. But just to finish up here,
yes, sir.
2 things. Are you active in the after hours in the pre-markets? Are you just there for observational purposes? Or are you actually pulling the trigger?
I look at the key names. I have about 30 names I look at stock-wise pre-market. I don't trade them unless there's a reason I have to. For example, like the Google trade we talked about. But typically, I may get in early because of economic news on the futures. But then I'm also looking at what the key members. Remember, I'm a investment grade names that I play, right? So I'm looking at key components of SPX and NDX. How are they behaving?
Okay.
During like a post-econ news, like a non-farm payroll. How are they behaving as we get into a cash market? I usually like to come in flat before the cash market, okay, on the futures, and then go back in 5 or 10 minutes later. Why? Because I want to see the liquidity that comes in from the people in New York, what size they're trading, how is it impacting the index. You can't, all of a sudden, there's a day and night difference between when Globex finishes and the cash market opens, where now you have a balance going on. But remember, throughout the day, while cash is open, that creates a countervailing weight against the S&Ps. You take that out, like aftermarket, it's free for all. I don't want to play there. And the volume drops.
Correct.
Volume drops. My indicators are very poor in low volume environment.
Okay.
For example, this week I'll trade nothing. I'll just look at some options. I'll trade nothing probably most of next week. Maybe I'll doubt I'll even work. Yeah, I mean I'll be around. I'll check things and make sure there's some ideas. Maybe trade some options, but not S&Ps even until about 6th of January.
Okay, so you're sitting out.
Because the liquidity isn't there for me.
Okay, and you mentioned some lotto trades here, and I
Yes.
know that they come on your radar as they pop on there.
Right.
But is there anything that our listeners should be keeping an eye on here? You have the
Well, it's a little bit
January
early
effect.
because those are mainly earning per share environment. So I'll be more than be happy, as I mentioned to Kyle, I'll be more happy to be available as we get close to EPS.
Okay.
And each day I have as you know, I have a couple of strategists. The night before, I also get some inputs from them on some names they're looking at.
Okay.
I look at some names I'm looking at. So coming in the morning, we have a target list.
Good.
Okay? Yeah, my background, of course, is aerospace and Navy and all that. We have target lists coming in. You got to do your homework. We're looking at what kind of volatility they're in, where are the chart levels in terms of signal channels, what's the whisper numbers on them, what's the trend / momentum indicators are saying on it, because you have to also choose. Remember, you can do this on the downside. The beauty of this is I don't care which side.
Right. So you're looking at, you make a great point here. You're looking at going to things when there's actually a driver out, when there's earnings.
Exactly.
There's some fun.
Catalyst. Always ask
Yeah.
yourself, what's the catalyst here?
Exactly.
If there's no catalyst, stay away. Go to another name.
Yep, and you look for that in the market. Well, Fari, I can't tell you how much we appreciate having you on the broadcast here. You brought a lively historical background to the markets. Also gave us a little bit of a inkling and what you're looking for in the markets. We would love to have you on
nice
again.
history lesson too there,
Yeah,
Joel,
a little
on the
bit.
markets too. I love that.
Thank you so
No
much.
worries. When we get closer to the earning per share area, I mean, there's like a second week of January to like maybe first week of February. Every day there's a number of these guys that come up. I'll be more than happy to contribute.
Well,
I mean, I can't give you a trade away because that's early in the day. Nobody knows. But at least I can highlight what are the key items we're looking at and why.
Point us in the
And
right
either by
direction.
tweeting or coming on the show and spending a few minutes with you guys.
Thank you you
Awesome.
so
Wow.
much. And
No
we were
worries.
going to have you on again. We are now going to move on to Mighty Joe Young with his morning headlines.
Thank you very much, Joel. Thank you, Fari, for coming on the show. That was really great, wasn't it, Joel?
Oh my gosh, that guy! He is.
was unbelievable.
He was.
He's just spitting fire left and right. And he's
It's
got
unbelievable.
so much to say and so much to talk about. That was really great. So we will have Fari back on again. I know he wants to come back on, and we'll keep going with that. So moving into today's headlines, UPS and FedEx say poor weather earlier this week and overloaded systems are partly to blame for packages customers were expecting for Christmas not reaching their destinations in time. UPS has brought in extra workers to sort out those delayed packages. Amazon.com says it will refund some of its customers and give them a $20 credit towards a future purchase. This has been the worst Christmas ever, said Larry Ledette, 55 of Houston, a UPS driver for 27 years. He made 337 stops and delivered 505 packages on Monday. He and other UPS drivers have been pulling 60-hour work weeks. I don't know what happened, he said, but this year's been crazy. They ran out of trucks. UPS normally delivers 16.3 million packages and documents every single day. Those numbers soar around the holidays, but UPS did not make pickups or deliveries on Wednesday. Extra workers were brought in Wednesday night to sort packages for delivery today and tomorrow, Godwin said. As an Amazon Prime customer, there was a promise of 2-day delivery, getting the gifts to his Carmichael, California home just in time for Christmas. One was shipped via UPS, the other FedEx. Online tracking tools said the packages would arrive by 8 p.m. on Tuesday, and neither did. Amazon.com has been notifying some customers affected by the delays again about the refund and shipping charges and will give them the $20 credit towards future purchases. The U.S. is exporting more cars and trucks than ever before as markets across the world recover from the recent recession. The number of U.S.-built vehicles shipped to other countries could reach 2 million units this year. More than half of those exports will come out of Ford, GM, or Chrysler assembly plants. The rest come from U.S. plants owned by Japanese, Korean, and German automakers. Automakers have allotted some of their U.S. manufacturing capacity to make cars and trucks for growing markets around the world. The growing number of exports has everything to do with the plant retooling and this new product onslaught with an eye toward meeting global demand, said Mike Jackson, manager at IHS Automotive, in a telephone interview with the Detroit News. Imports to the U.S. still heavily outweigh exports. The automotive trade deficit is more than $100 billion, but the gap is shrinking. Volkswagen is poised to sell more vehicles in China than General Motors for the first time in 9 years, regaining its place as the biggest foreign automaker in the world's largest auto market. Both companies have surpassed their targets to deliver more than 3 million vehicles in China this year, with Volkswagen crossing the mark on December 5th and General Motors a week later. The German automaker held a lead of about 70,000 vehicles through the first 11 months, according to data from the automakers. DirecTV, with more than 20 million subscribers around the country, has quietly started distributing a network called Weather Nation, just as its deal to carry the Weather Channel is set to expire. Although talks between the two companies are ongoing, DirecTV's decision to add Weather Nation is seen as a not-so-subtle threat that it is willing to drop the Weather Channel. Not only is DirecTV carrying Weather Nation, a small channel with very little reach or viewership, it has placed the network next to the Weather Channel on the dial, a move that could confuse viewers and has already annoyed Weather Channel executives. DirecTV, like many distributors, is eager to find ways to reduce programming costs. With sports programming driving up fees to carry channels such as Time Warner's TNT and TBS, distributors often try to squeeze smaller programmers as a way to save costs. Google has filed a new lawsuit to challenge Apple-backed consortium known as Rockstar that is using dubious patents to threaten its partners and customers in the mobile device industry. Google claims that Rockstar's patent campaign is taking aim at hundreds of California tech companies and that the litigation has placed a cloud on Google's Android platform, threatening Nexus devices in particular. The lawsuit amounts to an effort to shield Asus and other companies that use the open source Android operating system from a legal extermination effort by Rockstar, which filed a wave of lawsuits in late October. Rockstar is a corporate patent troll hatched by Google rivals, including Apple, Microsoft, and BlackBerry, after the rivals spent $4.5 billion, $2.5 billion of that from Apple, in 2012 for a trove of patents from Nortel, a long-defunct Canadian telco company. Today, Rockstar employs Canadian engineers to help with the trolling operation. Google hit back hard today after it learned lyrics site Rap Genius had been using dubious SEO tricks to attain top spots in search results. Now, rapgenius.com doesn't appear on the first page of results for a search of Rap Genius. The two companies are working on a resolution. Founded in 2009, Rap Genius is a lyrics and text annotation site. It lets users provide their own explanations for song lyrics, religious texts, legal documents, images, and more that other users see when they hover over snippets of text hosted on the site. The startup leapt into the limelight when it received a massive $15 million investment led by Andreessen Horowitz in late 2012. Known for their foul mouths and outrageous behavior, the Rap Genius founders had been riding high over the last year as their site climbed to prominent and lucrative slots in Google search results. But earlier this week, Rap Genius invited bloggers to join its Rap Genius blog affiliate program. John Marbach, the founder of the email filtering startup Glider, and Rap Genius offered to tweet links to its blog in exchange for him placing a series of links to Rap Genius Justin Bieber lyrics on his blog. The links were designed to trick Google into giving Rap Genius better result rankings on searches for lyrics to songs from Bieber's new album. Marbach then revealed that Rap Genius' unscrupulous tactics by publishing the email it sent him in a widely read blog post, prompting Google's web spam czar Matt Cutts to announce on Hacker News that they were investigating. Rap Genius apologized in an open letter to Google, asking for the entire lyrics site category to be examined, implying shady SEO tactics were common among its competitors. That apology does not seem to have gotten it very far, as Google this morning practically swept Rap Genius out of its search results. Don't mess with Google. It will bite you. Michigan State senior linebacker and two-time captain Max Bulla has been suspended for a violation of team rules, the school announced late Wednesday night. Ahead of the Rose Bowl. The school announced late Wednesday night the team arrived in Pasadena, California on Wednesday for the team's Rose Bowl matchup with Stanford on January 1st. Bulla did not make the trip with the team. He's a two-time first-team All-Big Ten performer. He is also a first-team academic All-American, was recognized as a scholar athlete by the National Football Foundation, and was a finalist for the William Campbell Trophy, which recognizes an individual as the best scholar athlete in the nation and is known as the Academic Heisman. Max followed in the footsteps of his grandfather Hank, who was a guard from 1952 to 1954, his father Shane, linebacker from 83 to 86, his uncles Chuck Bulla, a linebacker from 88 to 91, and Bobby Morse, running back 83 to 86, and also played at Michigan State. His brother Riley is a redshirt freshman. Today's trivia tidbit: Jimi Hendrix had been fooling around with the guitar riffs that became Purple Haze for several months, but it was on the afternoon of December 26, 1966, while in a backstage dressing room at the Uppercut Club in London, that he wrote the song's famous lyrics. And while critics and fans alike rightly hail Jimi Hendrix for having revolutionized the very sound of rock's most important instrument, his status as arguably the greatest electric guitarist who ever lived sometimes overshadows his talents as a songwriter. Purple Haze was a song that instantly grabbed readers' attentions with its famous opening riff and didn't let go through a little more than 3 minutes of tightly constructed instrumental chaos. But its lyrics sounded just as revolutionary in 1967 and maybe just as much a part of the song's appeal today. That wraps it up for today's editorial headlines. Remember, ladies and gentlemen, that the show would not be possible without our dear friends at OptionsHouse, that will give you 150 commission-free trades just for signing up with an account through the platform. So click the links at the top or the bottom right of the page. Go to OptionsHouse, sign up for an account, get 150 commission-free trades just because you listen to Benzinga's pre-market info. And that wraps it up for me. Hey, Brent, how you doing this morning?
Brent's good. I think
Good, buddy. What's up?
I thought he was just saying, "Excuse me while I kiss the sky."
Excuse me. Have you ever seen those books about the misheard lyrics, Joel?
No, I have not.
People, they would have people write in about what they always thought the song actually said, and then they compare them to the real words. And so, like, instead of "he's got the whole world in his hands," he's got the whole world in his pants. Or excuse me while I kiss this guy, instead of "excuse me while I kiss this guy."
I never thought that, but
well,
it makes sense.
my favorite one with that was the Eagles song, and I always thought they said "We be Jetalina." It is a big old Jetalina or something like.
Oh, that's Steve Miller Band.
Steve Miller, right. Yeah, that was the one I got wrong here.
I saw another one too from Elton John's Tiny Dancer where he says, "Count the headlights on the highway." Someone thought he said, "Count the headlights on the highway."
I was gonna say the go-to one was the Tony Danza.
Oh yes.
Hold me closer,
Tony
Danza.
Danza. All right.
I love Who's the Boss. I really actually do love that show.
All right, Brent, you got this? You got this? Because we've got opening bell. I haven't heard it yet. Did it ring?
Yes,
it did.
it
Ding,
did.
ding, 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 ding. And
we're
gonna Shaky Jake is gonna. He's actually just dabbing his eyes here on the news of Max Bullock not playing in the bowl game.
Sniff, sniff.
I would be happy too, but I took Michigan State in my Holiday Bowl extravaganza pool, and now their top linebacker is out.
Hi-yo.
Yeah, that's going to be a rough one. You know, the weird thing is that there's a lot of reporters obviously digging and expecting some kind of an arrest here. There's no arrest record. He hasn't had a team violation since 2011. Obviously, he's academic All-American, so there's a lot going for him here. So it must have been something really, really bad for D'Antonio to suspend him leading into the Rose Bowl. So gotta give D'Antonio credit there for sticking strong, because I mean, I don't think there's a lot of coaches that would take out their most or second most influential player heading into the biggest game of the season like this.
I think Dan Antonio told him that he couldn't listen to the pre-market info show while he needs his
trading ideas.
He just went off the deep end here.
Yeah,
but
I'll do it.
We're opening up at new all-time highs here. Not much has changed since I was gone here. Any movers? Anything you'd like to recap for us?
Things are really quiet out there right now. I know we want to take a look at Dish Network, though. They are actually, both the satellite providers there are going to be raising rates, so we want to keep an eye on them. Dish Network is Delta India Sandy Hotel, for those following along on your own charts. Shares are not up a whole lot right now. I mean, 0.9%, 5 cents, so nothing really. But the news did break that they will be raising rates on Christmas Day is when that news came out. So trying to sneak it through there, I guess, while no one was watching. So it could affect the stocks. We just want to kind of keep an eye on them. DTV, DirecTV is another one we want to take a look at on that. Joel, what do you think of either of these?
Well, Dish has had a nice run here. Made a new all-time high at 57.50. The high on Tuesday, 57.36 here. So you are developing a little resistance here at the 57.50 level. Really, not much else to look at besides that in the issue. There's an all-time high for the issue, and then you said DTV was the other one.
Yes, sir.
That was the symbol on that one. I'm not going to be surprised if the chart looks exact. That's not making a new all-time high. We are looking where that is currently trading at, and that is just off the all-time high, which we made 3 trading sessions ago at 68.86 here. We started to sneak back into the 68 handle. Current high 67.78 here. So I don't know. Looks like you got a little bit of profit taking. Doesn't look like it's going to run right away. Keeping an eye on that current high 67.78. Really not much above that to the all-time high at 68.86.
Another one I'm watching this morning is Twitter. I mean, what a ridiculous move over the last 5 sessions. Going from the low 50s to the low 70s is what we've seen. Shares are up over 4.5% right now, above the $73 level. I know that we broke briefly above $70 on Christmas Eve. I was actually, while I was at the gym on vacation, I had to pull up CNBC to get some quotes while I was running, and saw that that Twitter had busted above that $70 level. I kind of couldn't believe it. I don't know what really fueled that. I didn't see a whole lot of news out there on it, but here we go again, another continuation of that rally. I mean, what a chart here. I mean, it seems like this is just obviously a huge momentum play. Is this pulling a Tesla, do you think?
Well, first of all, looking at the technicals here, you did break below Tuesday's low 72.21, and you did, Tuesday's low was 65.56. Didn't get anywhere near that. Opened up, traded under 72. I mean, it's just so hard to call a stock like this. It's just going parabolic. I guess if you really feel like you need to sell it, perhaps get some juicy premium on some of the calls. See if you can get for the 75 or 80 calls, because this is just an incredible run for the issue. I guess looking at the intraday low, 71.76. If you really want to be protected, move your stop up to there. You have another gap down $1 to Tuesday's high. But the only thing I can say is Twitter is they better not disappoint the street when the earnings come out. That's the only thing. I mean, if I was holding this thing, and I'm not sure when the first earning date is, I mean, that would be the only thing that could derail this stock. But, wow, what a great run. It never it sold off the IPO. 40 was the number, but it got nowhere near to those numbers that were the original projections.
Yeah, I'm really interested to see that earnings report, actually, because I wonder if they just match street estimates, will the stock pull back 20% on that? I mean, is the street just like thinking Twitter's gonna hit the estimates out of the park? I'm just trying to figure out what they're exactly pricing in. I know what the future potential of Twitter is, and I think there's some really cool stuff that they can do, but they're not quite doing it yet, and they're not monetizing it that way yet. And I would just be surprised if the street's really looking at that, or if it's just a crazy momentum trade, and then if you see a poor earnings report, will it just completely turn around and do the same thing in the other direction? I don't know. Going to be an interesting report to see. I think we've got like a month and a half before we see that. So it's not listed in the sources I have right in front of me. I can dig in later and see exactly when they do report, but I know I think we've got about a month and a half. So we have we got to take a look at some of the other movers. I did see a little bit of action this morning in the 3D printing sector. They always tend to move. Looks like 3D Systems, that's Delta is the ticker there, up over 3.7%, sitting at that $89 level, maybe testing $90 sometime soon. Trying to look at some news here, see if there's anything, but I'm not seeing a whole lot. I'm wondering if some of their more consumer level 3D printers may have gotten kind of gave them a boost through the holiday season, because I know some 3D printers were kind of given as gifts to people that are really into engineering or home creation, stuff like that.
Right.
The people that's kind of nicknames makers.
Yep, expanding their usage. It did take out Tuesday's high, 89.40, went to 89.77. Are pulling back now below that high. So keep an eye on an intermediate resistance here, 89.40, 89.77. Above that, you have the all-time high at 91.01. But I will note here, and I'll give it up to the analyst. Before I left, they were pounding the table on these 3D stocks, and the market has responded in kind. So looks like the analysts are getting it right here with the 3D print stocks.
Yeah, I mean, we've got Stratasys running as well, up just under 3% right now, sitting just below $130. Now, Stratasys, as far as I understand, they have more exposure to consumer 3D printers. So, if that, that off the cuff thesis I had a minute ago of maybe it was just the Christmas season, people buying 3D printers as gifts, I would think Stratasys would be getting more benefit from that. But they both seem to be rallying pretty hard, so may want to keep an eye on that one. Gonna hop over to the X1. That's X-Ray Oscar November Echo. They're up about a little over 1%, and they're at $59. So it looks like all these guys are about to break whole number levels. 130, 90, and $60 are all right in play for today. So it could be really interesting, at least psychologically.
Well, the most interesting chart here is that X1 here. It's been running into problems at 60. Last three trading sessions, 59, 50, 59, 49, and 60 on the nose on Tuesday. Stopped at 59.74 here. So after a major run from under the $52 level, someone is targeting 60 in this year as an exit. That same person was out there selling on November 20th at 59.80. So very well-defined resistance in this issue. And then also just harken back to what our guys from Retro Media said, and they're just looking for HPQ to make that announcement that they're hopping into the 3D printing fray. So we'll keep an eye on that. That stock's been steadily marching up, just a little short of its 52-week and multi-year high here. Let's see, major resistance at 28.70. We're only 30 cents away from that. So HPQ on the move too.
What's interesting actually with Hewlett Packard there is that they actually did have a deal with Stratasys back in 2011 where they were working together on 3D printing. They do have some patents as far as 3D printing goes, but not a huge portfolio there, so they could be an entrant there. And they've worked with major 3D printing companies before. Kind of surprised they got out of it. It could be an interesting entry for the company. Another one I want to take a look at real quick is Amazon. Did you hear about all the problems with the U.S. Postal Service? All the storms and the massive volume of packages that were sent for Christmas actually caused major delays, and a lot of the packages that were supposed to arrive on Christmas Eve or even the day before Christmas Eve are slated to arrive today or tomorrow. Well, I mean, that's not exactly on Christmas. Well, what other companies are going to get hit by this? Your online retailers that offer guaranteed Christmas shipping.
Was it the weather?
I mean, you had a lot of snow. That they're saying that's part of it, and in this case, I think USPS can actually blame the weather here, unlike Coca-Cola that tried to blame the weather over the summer for poor sales. I thought that was kind of interesting. But we do have Amazon trading down a little bit, about $1.52 here, staying below that $400 level. It could be interesting because I know a lot of buyers that bought that guaranteed shipping for Christmas are going to be asking for a refund, or they may even be sending their goods back to Amazon because maybe they went locally and bought, a higher priced item that was kind of a substitute for it, and now they've got two of these gifts. They only need to give one, so they're going to send the other one back to Amazon. So you might get a little bit of a pullback on this. Joel, what do you think of Amazon obviously being near that $400 level, kind of ripping here recently?
Got a couple closes above it, but now you're back under it here. Opened up right at the high, 401.79, and has sold off 97.50 on the low of the day as we speak here. We'll be looking at the first support point, and the major support is 396. Had a low at 96.37 on Tuesday, and then on last Thursday a low at 99. On Monday at 99.20. No, that was Friday. 95.78. So 396. Major level of support here in Amazon. I think I'd get a little bit worried if it took that out because there's not a lot underneath that. Dennis just is, I'm not sure if he's trying to short this Twitter monster or not here. Catapulted here in the first few minutes of trading and now has had a reversal here. I don't know if Dennis is going to call this a key reversal or not. We are 3 points off that high. I guess you got to keep on, to fill the gap here at from Tuesday's trading, 70.87. That's the first level of support here. That is support because it was resistance. So see what's happened, $71 level. Underneath that, if you're looking for targets on the downside, the close was a buck below that at 69.81.
Well, we've also got our good buddy Tesla here on the rise, up over $6 on today's session. $158 is the last trade that I'm seeing, rallying on I think just hope here maybe. I don't know. I'm just kind of taking a look at see if there's any headlines I'm seeing here. Not a whole lot coming out on Tesla this morning. I know we had something about company doing some kind of promotional program, but it's not one of those huge stock moving headlines, or at least so it would seem. What was it? VP for China VP for China Tesla Motors says company plans showrooms in first-tier cities to attract wealthy buyers in China. So maybe they're deciding to enter China, and that means that stock should go up. I don't know. I think traders maybe just kind of latching onto this one as a another rally. Joel, we're approaching that 160 level. It looks like. What are you thinking here for Tesla?
We did talk about that. That was a major. It's hard to tell here on the chart, but that was a major area of support. Remember that thing bounced between 160 and 170 for almost 2 weeks, and then broke above the 170 level, went up to the all-time high, and now is pulling back. I keep it a really close eye on this 155 area. You basically have had a move from 194.50 down to 116.10. I like to look at the retracements on those, and 50% retracement takes you above this level here, 155.30. So I'd really like to see a series of continued closes over 155. 160, I just don't think we're going to slice through that the 160 handle before. A lot of people sitting on losses from the earnings. That was a big sell-off here. Did form a rounding bottom here when it made the low, so really no sign of a rounding top here yet in shares of Tesla. But hey, if you got a target in this area, use it. If I still had my 130 calls, I'd be out here at 155 because that was my original target. But I guess playing a weekly doesn't always do too well. But just going back to that Twitter real quick, we came down within 20 cents of the high from Tuesday. So we'll see if it can hold that gap area.
Well, Joe, looks like it's 9:46 already, believe it or not. But we may need to wrap this show up here real quick. Any last thoughts from the market today?
S&Ps are just missing the the pre-market high 1833.50. We've gone to 1833. So like to see that taken out here within the next few minutes to confirm just another day of rallying. Coming back on the downside. The close was 1829. That was the all-time high close. Pre-market low 29.75. So 1829 and 1833.50 are levels we're looking at today.
All right. Well, with that, I think may need to close down the show for today.
And we'll be back with you on Friday. Have a good trading day.